about this topic for a number of years now. And so the first thing that I always like to do is get a sense of where everybody is on that topic. So if everybody could please stand up. Everybody who doesn't own Bitcoin, sit down. Okay. Anybody who doesn't own Ether, sit down. Anybody who doesn't feel comfortable explaining what blockchain is, sit down. Awesome, okay, as always, 50-50. Thank you, you can all sit down now. All right. I joined my first internet startup in 1994. We spent $5 million over a period of 18 months convincing 5,000 people that it is a really good idea to use your computer to make phone calls. We did slightly better a few years later when we created an internet startup, and we managed to aggregate about 350,000 users for that startup, and selling it in February 2000, so about 6 weeks before NASDAQ hit its all-time high. At that time, I was preparing the company for an IPO, and we were valued at $1 billion. We sold for $360 million, and everybody was angry with me. Needless to say, that turned out to be the right decision in hindsight. So why am I telling you that? So investing is mostly about timing. So there's this old saying that you probably have heard many times, and you will learn many times over. Being early is the same as being wrong. Same holds true for being late, by the way. And the other thing that we learned the hard way, and I learn every day and see people learning every day, is that you don't try to convince users to adopt your technology. You adopt your technology to the user. So these are the three messages that I'm trying to get across when I explain to you how we look at the blockchain as it is today. And I didn't bring my glasses, so I hope I figure out what is the right button. I did. All right. So whenever someone is presenting their startup to us, they typically start with addressing what is the problem. And a lot of people in the blockchain space trying to address this problem. I call it the cow problem. Cow is short for coincidence of wants. It's one of the major problems in economics. And these are some of the solutions that have been thrown at us. So let's see if these are solutions. So these are commonly referred to as cryptocurrencies. And I suggest to you that this is a terrible, terrible term. Anybody who went to business school probably came across this particular definition of what we think is money. This definition was created at the same time that Graham Bell was awarded the patent for the telephone. So today we don't think of a telephone as having wires being attached to a wall anymore, I assume, at least for most people in the room. But we're still using this particular definition. Terrible idea. Why? Because the medium of exchange has been digital for years, decades at this point in time, right? Also, we have been using distributed ledgers for decades. What is this? Is this money? Thanks, Alex. Correct, it's a Federal Reserve note. It's a debt instrument. So even though we didn't change the name dollar on this instrument in 1971, it became something entirely different. In 1971, the dollar failed. Every fiat currency in history eventually failed. The average lifetime of a currency, of fiat, is less than 25 years. Oh, but the important thing that I forgot to mention is it was titled bearer instrument. Bearer instruments are great. Why is that? Because I can hand it to you, and it settles the transaction. There's no middleman needed. I don't have to wait for the transaction to clear. And that's actually the main invention outside of the DAO that I won't get into much that the Bitcoin white paper introduced. By the way, whenever you hear people talk about this idea of blockchain technology, they probably don't know what blockchain is, because blockchain technology is just a fancy way of encryption that has been around for quite some time. So this is the only slide where I use color. I'm colorblind, but I want to press upon you that don't expect to see this, right? I don't know if anybody in the room expects to see an Ether, an XRP, or any other value on their banana anytime soon or ever. This is the same fallacy we see every day that I mentioned in the beginning, that users suggest to us, hey, just adopt my technology. No, you have to adopt your technology to the user. So where does this take us? I suggest to you that money is just language. Whenever you look at your digital wallet, what do you see? You see a translation into the language of trade that you understand. So if I'm in another country, I might see it in euro. I might see it in yen. Money is just language. Currency is simply technology. Where does most technology move to? This is the answer. It will move to money over IP. What's the practical application? The practical application is you don't need to know what your merchant expects. You just need to understand, in your language of trade, what you expect. If you get to another country, you look at price, and you translate it so that you don't spend $1,000 on your Coke, because that's the language of money you understand. Once we get to money over IP, you will notice that no one cares about cryptocurrencies. They don't matter. At this point in time, your wallet will simply communicate with the point of sale system, with legacy financial institutions, or with your Bitcoin ATM. But as a side effect, legacy currencies, 5 minutes, okay. Legacy currencies will be crowded out. So these are the simple things that Bitcoin introduced. The fungibles. These are the next steps, the non-fungibles. For the first time with ERC 721, computer created a digitally unique item. So we're investing in NFTs that go into games, and what we expect to see, that we start to tokenize things like MP3s and MP4s. And that's one of the common misconceptions in that space, unfortunately. This is really about creating digital universe vending machines. This is how you should think about a smart contract. And we will see many of those. And they will dispense legal services, they will dispense contracts, titles, deeds. But we are far from that. Right now, there's a lot of talk about tokenizing the world, tokenizing real estate, and so forth. Most things you cannot tokenize. A token is a peer-to-peer instrument of the blockchain. Most people start using this as a metaphor. Don't fall for the metaphor, because what you want to decide is whether or not to invest in the token or the digital vending machine. You need to understand the difference. So real fast forwarding here. This is an example we pointed out, how you can track, okay, we jumped over that, real-world items on a blockchain using different blockchains, using NFT technology. We talked about identity earlier. We have our own definition of identity. Identity is simply your time and attention. And that's being stolen right now and has been stolen for years. Blockchain-based solutions will hopefully solve this. So one of our main focus areas of investing is identity. Also sharing economy. Right now, sharing economy means mostly you're sharing your wealth with Airbnb, with Uber, and so forth. Blockchain-based solution will finally create the actual sharing economy that is purely peer-to-peer. Okay, so where does this take us? This is the overview. The internet disseminated data distribution, information distribution, and disrupted the publishing industries, and the post office. A little tidbit, if you had to put a stamp on every email you sent, then the GDP of the entire country wouldn't be enough to maintain the email system for just a single day. But for whatever reason, we decided we are still doing this with money. This has to stop, needless to say. But fungibles will take us to non-fungibles, will take us to identity. There's a variation of this particular graph that you find online that was very successful and very popular in Silicon Valley. It's utterly and entirely wrong. It's called the fat protocol theory. Obviously, no one ever paid for a protocol, right? So you're not paying for using SIP, you're paying maybe to use Skype. For the most part, it's free. So, but all of these companies right now make their money on the application layer. That's correct. And for the most part, they will be diminished, and it will move to the protocol level, but very thin, very, very thin. So what's the opportunity? These are the real-world numbers now. They will come down, but they move to blockchain-based solutions. And again, I press upon you, it's not about the protocol level. It's about the clients. Invest into the client. You don't invest in SIP, you invest in Skype. And by the way, we were early with our voice over IP solution in '94. We failed, spent $5 million. Needless to say, Skype was then later bought for $2.6 billion in 2005. Being early is the same as being wrong. So this was a lot of concepts, and I have a minute, so I did well. I try to write an article every other month or so on some of these concepts. You can find those on Forbes if you want to dive in deeper, or just see me afterwards. Thanks, everybody.